It's the end of the year and we're about to finish 2022. But before you can get into 2023 and shout Happy New Year, we're going to be talking about some things that your accountant should be sharing with you to make sure that you're finishing the year strong and that you're getting into 2023 even stronger. Also, we're going to be talking about the tax tea of the week. A business owner pleads guilty to selling false goods on Amazon. All that and more. Stay tuned as we jump into this week's episode of The Stuff Your Accountant Isn't Telling You. Welcome back to another episode of The Stuff Your Accountant Isn't Telling You. I am Lola Turner, and I'm joined by Terrell Turner. Hi, Terrell.
Hey.
Hey, how are you doing?
I am doing well. It is Christmas time, so it is time to put up decorations. So that is underway right now.
Yes, that is fun stuff. As you guys can see, we have a Christmas tree behind us in the background here. Also put up so well by Terrell. For those of you who are listening to the podcast, just imagine it being so pretty. If you want to see the details, you can actually go into our YouTube video to see that. But I'm excited about this week's episode, Terrell. Excited about the holidays. I think this is such a great time for people just to reflect and think about, man, all the things they've accomplished. For some people, it's been a difficult year in business, personal side, whatever your circumstance and situation has been. I think 2023 is just such a great, it's as you go into a new year, not just 2023, but as you go into a new year, is a great time for people to just kind of almost feel like they're starting afresh, right? To do things differently, to start the new journey. And I think, for us, I'll speak for myself. I think it's an opportunity for us to, in our business, finish the year strong, and to finish the year strong. Not only that, but also to go into 2023 stronger. So we have some great things that we're working on, and I'm just really excited for where we're going. So I thought it would be kind of good to do this episode to share with our audience, some tips and some things we're working on and some things we've been sharing with people in the, as we get ready for the Money Mastery 2023 program.
Absolutely. I mean, I think that there's so many things that happened this year. I think that business owners should definitely keep in mind as they go into 2023. And then also, I mean, as you get to the end of the year, I mean, you're ready to kind of just take a break, or you're ready to kind of just take a victory lap to the fact that you made it to the end of the year. And I think the holiday season is definitely a challenge for a lot of business owners. But I do think there are a few very important things to do that will help you not only, finish the year strong, but it'll get you started off going into 2023 with a better plan, better focus, and so you can achieve, more profitability, growth, and the goals that you want.
Yeah, no, definitely. And I'm excited to jump into the first one. So I think for us, this is something that we share with, with our clients. And this is something that I think is important to consider across the board. And the first thing is just reviewing your financials. I can't stress how important that is on my end, because I think that it's so critical to know. My view when I think about financial is you need to understand kind of where your business has been so you know where you're going, right? And what better way to do that with your financials to just see, when you think about your business, like, how did you perform so far? Like, hey, where are the areas of opportunity? When you kind of think about that, Terrell, when you talk about, like, we talk about reviewing your financials, what are some of the things that come to your mind?
Yeah, I mean, I think, first is most people don't look at their financials until it's time to do their tax return.
Mm-hmm.
Now, I would say is at the end of the year, I recommend people to review their financials, not because that's the only time that you should be reviewing it throughout the year. But if I'm being completely honest, most people aren't getting it done throughout the year. So when you get to the end of the year, I'm just like, hey, this is a prime time for you to be able to look at your financials to see what have we been making money on? Where have we been spending our money? Because a lot of people get surprised when they start looking and seeing like, hey, what have we been spending money on? Like, why are we spending so much money on software? Or why are we spending so much money on office supplies when we have, all of our workforce is remote? Like, that's a good question to ask. And I think some of it will reveal that, hey, if you've been doing your bookkeeping yourself, maybe things got categorized wrong. If you pay a bookkeeper to do the bookkeeping, maybe they should have been giving you a heads up about this throughout the year. But I think when you start to look at your numbers, inevitably people start to realize, like, wow, I did not know we were spending this much money over here. Or
Yeah.
I didn't know, or maybe, hey, why are we paying for 5 different Netflix accounts? That would be a good one to look at.
Yeah, that's what we've personally seen, speaking from experience. But I think also, like, another thing that I've noticed is allows you to catch, on the theme of, like, tax and fraud. It allows you to identify, like, hey, what is this transaction? I don't recall spending $5,000 on this. Like, it's a good opportunity for you to look at your financials so you understand, really kind of where your business is. I think it's important.
Yeah, I mean, because I think it is one of those really great things to do is as you get to the end of the year. I mean, when you think about what were your goals, what were you aiming to do, and as you get to the end
Mhm.
of the year, you can see, all right, it's end of November, beginning of December. Where are our sales at now? Because I think a lot of people tend to take their foot off the gas when they get to December, but December is still a great month for you to close the gap. Like, let's say if you're $10,000 away from your goal, or let's say if you're 40, 50, 60, whatever the number is, maybe you can look at that and see, hey, at the end of November, where is our number? How far are we away from our goal? And then ask yourself, hey, what can we do in this last push, this last 31 days? What can we do to push ourselves closer to the goal? And maybe you don't hit the goal, but you can still get closer to your goal, because I think if you get in the habit of start looking at your numbers on the regular basis, I think what it's going to do is it's going to help you start thinking about, like, hey, what decisions do we need to make sure we're moving in the right direction? And I think a lot of people just get so caught up in just doing the business and all the stuff that needs to be done that they don't look at the numbers, so they feel very, disappointed when they get to the end of the year. But it's like, that means you need to look at your numbers on a regular basis so you know where to make changes.
Yeah, and I think also just not disappointed, but also overwhelmed, right? Because at that point, 11 months of the year have gone. And so you might feel a little bit discouraged and feel like, man, like, what am I going to do in 31 days? Like, how much of a change can I make? But what I would tell the business owner in this case is, even if you haven't been looking at your financials throughout the year, and now you're kind of, okay, fine, I'll take a look, and you don't like what you see, this is such a great opportunity for you to position yourself to win in 2023, right? Like, what are the things that you see that you don't like? Did you spend more money in certain areas where you don't like? Did you miss some targets and some opportunities where you feel like, man, I could have made money in this area, or hey, there are some things I could have taken advantage of? I think, like, one of the things that I've seen is some business owners, like with last month, the recent small business owner week that we have, or small business Saturday that we had. Some people may have not taken advantage of that, and you might feel a little bit like down, or feel like, man, I should have done more. But I think the great thing about the past is you can learn from it, right? And so my biggest advice is, don't feel discouraged if you haven't done this before. Focus on how can you do things differently going forward, so that you make sure that you're in a better position this time next year, and you're not having the same conversation again of like, man, like, I feel like I didn't hit my goals. And for some people, Terrell, like, I think some people didn't even have goals. That's the other problem, right? And I think that's the challenge. But at the end of the day, for us, the financials are a good way to kind of give you a sense of direction, to tell you where you've been, and then to also help you figure out, okay, where do you want to go next if you don't like where your destination is?
Absolutely. And I think also, I mean, it brings us to the second point that I wanted to bring up was, looking at year end specials. Because if you're looking at your numbers, let's say if you're looking at your balance sheet and you see that, hey, your inventory is up a little bit higher than it usually is, or let's say you
Mhm.
have some stuff on stock that has been sitting there for a while, or some stuff that's about to go out of style. Maybe the end of the year, that last 31 days, is a great time to do a 2-for-1 special, or a
Mhm.
40-50% discount. Because the thing is, if that inventory is about to expire or go out of style, then you may end up having to throw that away, or you may have to give it away. It may be a great opportunity to look and see, hey, you know what, do we have some things that we can run a end of the year special on? And I also think that while end of the year specials can be a great opportunity, sometimes I think people overuse end of the year specials where they
Mm,
just get to the end of the year and they just slash their prices and everything goes on sale to where if you're already on track, you're already hitting your numbers. You don't just have to do an end of the year sale just because everybody else is doing it.
right.
You gotta, that's where I think reviewing your own numbers will help you understand, do you even need to put this stuff on sale? Because if the value is there, then you may not have to just follow the crowd of, hey, we're doing a December to remember special. Like, you may not, you don't have to be that desperate for the sale if your number, if you're already on track. Like, for example, I think about for our business, like we're not doing a end of the year special on our services. Like,
Mhm.
it's not like, hey, call me before December and you'll get CFO services at a 50% discount. That's not happening. We're not doing that. Now we may do specials on like the on-demand online courses, like that may be a special. And I think if you're looking at your numbers and you're thinking strategically about your products and your services, you may find that, hey, there are some products we should do a special on, but then there are other ones we don't. And I think part of that just comes into like knowing the value. For example, you typically don't see people trying to sell houses and saying like, hey, since I'm trying to sell my house in December, we're going to do a December year-end special. Like,
Mhm.
because the value, people understand, people have a different perception of the value of a house. Or even when
Mhm.
you think about, I'm talking about like super luxury, like I really like the Rolls Royce vehicles. They don't do December specials.
They never
The
do specials. I don't care what time of the year it is. They don't do
the
specials.
price is the price, especially after, the World Cup is going on right now. Saudi Arabia beat Argentina. Like, the Saudi Arabian team is going to all get Rolls Royces for beating Argentina in their game one series. So Rolls Royce is like, we're going to be selling a lot at our normal prices. But I do think that every business has to look at their own business and say, okay, all right,
Mhm.
do I have products and services that it makes sense to do an end of the year sale? It may not make sense to you to do that on all of your stuff, but some of it may. And I think that that's an important thing to look at. But then also consider that, hey, you don't have to do an end of the year sale if it doesn't make sense for your business.
I agree. And I think I like what you said about really being strategic about it. It goes back again to looking at your numbers, right? What products based on what you see that are in your inventory may be going out of style? What products do you have that, maybe you didn't really sell as much during the year. So now you're trying to push those. Like those are all questions you need to ask yourself. Like you said, it's not just a December to remember sale on everything. Like in some areas, it doesn't make sense to sell everything. The other thing also that I thought about when you were talking, Terrell, is sometimes the December to remember special isn't doesn't work for you as for your business in terms of like the timing of when you're doing it. Because a lot of times if you have a business maybe where your business is seasonal, and let's say it's a business where you tend to have most of your sales in the summertime, right? Then your December to remember may be a September to remember. I don't know, what the word is. So that's something you also need to think about is in terms of your product offering. That's one, right? The value of your product, but I think also the timing of when you do your specials, because we're sharing the year end special because for us it's a good way to finish the year. But again, going back to the importance of why it's so important to look at your financials throughout the year is for you, it may be a January thing. If you're, for example, if you are, in tax season or you sell tax products, the end of tax season may be a great time for you to start putting that stuff on special. So you really need to look at your business and assess when does it make more sense. If it does make more sense, to do a special period, when does it make more sense to do those specials so you're not trying to offer products in a season where nobody's going to buy them.
Absolutely. I mean, I think that's an important thing that is to think about, and I think it goes into really knowing your own business. And I think that's
Mhm.
where a lot of people struggle is they're not really thinking strategically about their business. Like, for example, one of the things for us is doing a special on our stay out of jail plan. The reason why we do it now is not because, hey, it's the end of the year, let's just do a special. The reason why we do it now is because it's related to tax season. It's about
Mhm.
getting people, helping business owners who don't understand tax, giving them the basis that they need so they don't fall into tax issues with the IRS, or they don't fall for some scammy accountant or scammy tax preparer who
Mhm.
is doing stuff that's going to get them in trouble. It's about helping them understand the basics. And we do it in December because tax season is January through March. And I think, the timing of it, I mean, is very important. I think that as a business owner, I think you got to take that step out of the details. I think December is a great time to do that, to take a step out of the details and really work on the business. Like, what's smart, what's strategic for me to be able to move my business forward. And also, I think, the last point on the year end is, as you're looking at your inventory, if you see that there's something that isn't selling very well, then maybe as you prepare for 2023 is stop buying so much of that item. Like,
Right.
maybe you don't need to keep that on like replenishment. Maybe if you look at your expenses and you see like, hey, we've been spending money on this, but we're no longer using it, maybe it's time to cut that off. Maybe it's time to stop doing that. And I think you'll get, those insights if you're willing to really, pay attention to your numbers.
No, agreed. Agreed. And I think speaking of your numbers, another thing, the third point I think that we want to communicate is making sure that you're collecting on your collecting after you provide
Yeah.
services. So just cash collections, I think, are so important because, sometimes a lot of people, we've seen challenges, our clients where they do the work, they provide the service, and then they don't get paid.
Yeah.
Especially if you've provided the service to your customers, you should be getting paid, right? And I think this is a really great time to go back and try to understand, hey, who owes me money? That's where your accountant can help you. If you're doing this by yourself, it's a good time to kind of go pull your AR statement and look, hey, what's my receivable? How long has it been outstanding? Who hasn't paid me? And really kind of crafting that email to say, hey, like, okay, I see that there's X balance still outstanding. What can we do to what is there something that you need us to do to ensure that we process this payment? You're having challenges with the processing system, whatever it may be, but I think this is really a good time to do that so that you can set yourself up going into 2023 or the new year, right? To be able to say, okay, I've collected, and now you have a good steady cash flow to maintain and sustain your business instead of trying to struggle to, starting off the year with a deficit. Like, nobody wants to do that, right?
Absolutely. I mean, and I think when it comes down to collecting a payment, I mean, there's some fundamental things to, to talk about and to have in place. And, this may, to some business owners, this may seem very obvious, but, the number of business owners that I talk to, or even the numbers of accountants that I talk to that tell me about businesses that are struggling because they just aren't invoicing. And I think part of that is just,
Mm.
no one's ever really sat down when you started your business. No one really sat down and walked you through the billing process and the collections process. So, I'm going to take a second to just kind of break it down. I mean, there is the step where you get in touch with the client, or let's say the client comes into your business and you guys agree on a price, you deliver the service or the product, and they get the invoice. On the invoice, it will have a terms of payment, like how many days they have to pay. Now, within that time, let's say if your terms are 30 days. So within 30 days, they are good. But on that 30th day, you should expect to have received the payment already, or they should be paying you on that 30th day. And so what a lot of people don't, miss out on is actually sending the invoice out. It's like they'll do business with someone and they'll say, yeah, the person agreed to pay me. And I'm like, okay, all right, where's the documentation that tells them when is the deadline they should pay by? And a lot of times when I'm talking to business owners, they're like, oh, we don't send an invoice, or or they got a receipt. And I'm like, well, if we look on that receipt, does that receipt say when they should pay? Because also, if you ever fall into a situation, let's say, where you have to get collections involved, or let's say hopefully you don't, but let's say if you have to take somebody to court, if there is no definition about when they are expected to pay you, then you are going to struggle to be able to get your money. So I think the
Mhm.
first one is on sending out the invoice. And on that invoice, it should have the date that you completed the service or you provided the product. It should have the what they got. It should have the total amount that they owe you. And it should have the date of when they should pay you. And based on that, if they go past that date, then you need to have a plan to say, hey, if they are 5 days late, I'm going to follow up with them. If they're 10 days late, we're going to send an email. If they're 30 days late, we're going to do a phone call. Hey, if they're 60 days late, we're showing up at their doors. Like, maybe not that extreme.
But I mean, I think ultimately, if I understand what you're saying, like there should be no gray areas, because when there's a gray area, it opens up room for interpretation, and feel like, well, I didn't understand that this was what I was doing, or I didn't understand that these were the terms. No, no, no. We're not gonna go back and forth on this. Do we agree that this, and this? These are the terms. This is when you need to pay me. This is how much you need to pay me. So it really just eliminates the friction, and it eliminates that awkwardness of having to tell someone, hey, you owe me money. Like, when are you gonna pay me? Nobody wants to have that
Yeah.
conversation.
I mean, I agree. I mean, because I will say is when it comes down to business, the best thing you can do is, like you said, make it plain, let people know up front, hey, this is how we are doing business, because it is very difficult to negotiate terms after the fact. And I'll be
Mm.
honest with you, if you're trying to negotiate terms after the fact, you're probably not going to get the most cooperative person if you're trying to do it after the fact. So I would say is as you get to the end of the year, look and see who are all the people that we provided services for, or we provided products to that have not paid us yet. And what you need to do is look at that and say, hey, what's the age of their invoice? Are they 10 days old, 30 days old, 60 days old, whatever the case is? And you need to have a plan. If they get past due, what is step one? Are you going to send an email? You're going to send a text message? They get 10 days past due, what are you going to do? They get 30 days past due, like, what is your procedure? Because what I will say is two very important things. People tend to pay who they like, and then
Mhm.
next, they pay the person that they need. And then third, they pay the person who follows up. And because there have been several times where, we've had a client that we sent them a follow up, and, the original invoice got lost in the email, or we sent the invoice to the wrong email address. But when we
Mhm.
followed up, they paid immediately. So I would say is you definitely want to make sure that you're doing that at the end of the year, because you want to get as much of the cash that other people owe you, because also at the end of the year, when people may be spending money, they may be doing additional shopping, you want to make sure before they go spend the money they owe you that, hey, you collect what's yours.
Yeah, no, definitely. I think that's a good one. And the last point to touch on is the year-end vendor sale. So we talked about like the, year-end specials that you're offering, but if you think about it, the people that you buy from are also probably going through the same process of deciding what they want to offer sales on and what specials they want to do. So this might be a good opportunity for you to see if there's a product that, hey, January, the sales spike for these products, or hey, February, there's a lot of demand for this. Hey, it might be a good time for you to take advantage of stuff that you're going to buy anyways and during December, and kind of use that opportunity of, hey, if you have a discount from a vendor that you normally buy for them, or stuff that they're trying to sell at a discount, that might be a good opportunity for you to take advantage of those specials and actually buy them at a cheaper price than what you would normally pay for. Now, I will preface this by saying, just don't go buy stuff. I think, Terrell, you mentioned about like the inventory, like just don't go stock up on stuff because you have a hunch that the stuff is going to sell. No, this is why it's important to go back to the numbers that we talked about, right? Is what are your top selling products? And hey, what's the timing? If January at the beginning of the year is like, for example, if you sell workout equipment, hey, January, February, March, people have new goals. January is probably going to be the time where you're going to see a spike in demand. So uh, you know, are your vendors that you buy from, whatever it is that you buy, are there any specials for the month of December that you can take advantage of? Are there any specials for the end of the year? Because then it puts you in a position where your gross margin is going to be better because it costs you less to acquire these products. So it's important to do that, but I only recommend doing it for products that are actually moving and products that are actually selling. Yeah.
Yep. Absolutely. I mean, I also think, you have to think about it from this perspective. And this is something that I talk about in our, like the small business CFO program, where we're really, pretty much giving inside information to business owners. And one of the things that, in that program that we talk about is the psychology of sales. Like,
Mhm.
what makes people offer discounts? Like, when you break down the psychology of it, one of the very interesting things, and in that I give a very specific strategy. This was one of them. Is, let's say you're at the end of the year, you don't necessarily need the materials, whereas you can call some of your vendors, and let's say if you buy products from them, hey, we're good as far as what we need to get through December and January, but we have some extra cash on hand. Are there any specials you guys are running? Because we're willing to buy it early. If you say that to some of your vendors, they will find a discounted price to
Yeah.
offer to you, because you've already told them, hey, we don't need this, we got some extra money, we're willing to buy early. Those three things, like, I've worked with Fortune 500, 100 companies, and I'm telling you, that was something that the some of our big customers would do, because they just picked up on the game. They knew that, hey, call us around the end of the quarter, the end of the year, and they would say, hey, we're good on what we got, but we got a little extra cash. Is there anything that you have on sale? We're willing to pay for it now. And we would always find a sale for them. And I'm telling you, some of the sales that we offer were like $1 million discounts or rebates and stuff like that. So companies are willing to do, give you some type of break on the price if you got the cash to buy it now and you don't need it.
Yeah, no, that's really good. And I think some people might be thinking like, why would a company do that? Hey, if we just talked about at the beginning, what was your goal, right? So if you have a sales goal to hit and a target to hit, it's a good opportunity to get that incremental revenue. And if you are on the business side of things where you're actually making purchases, you want to make purchases to reduce how much, profit you have to pay taxes on. So all of those things are good incentives for people to, look at this stuff and consider it. So for us, we're saying, hey, 2023 is coming, the end of the year is here, and for us we think, important things you should be considering, and these are things we share with our clients, is one, hey, review your financials. So if you haven't had an accountant and your accountant share that with you, probably a good time to go through that, because then what that allows you to do is figure out how you need to make, different moves. Are there different things that you need to do in 2023? The second thing is look and see, are there any year-end specials that you need to be running or that you can take advantage of to run? If you have products that are not moving as quickly in terms of sales, it's a good opportunity to look at that. And then the third thing that we talked about is just, hey, making sure you're collecting on your cash. And Terrell, you made a really good point of, hey, invoice the customer. That's the first thing you should do. So make sure you're invoicing your customer, and there's no way you can collect something if you're not invoicing. And then the other point in that was just being very, very clear about what are the terms of this agreement. And because when you're not clear on that, it causes, gray areas for your clients, and it just makes it really awkward to collect at the end of at the end of the transaction. And nobody wants to have awkward situations. And then the last but not least was just approaching your vendors when it comes to looking at, hey, what are things that we buy usually, and approaching your vendors to see if they have any discounts, that they want to offer, that they can offer us. Terrell put it, approaching with the psychology in mind. Hey, we have extra money, we have some opportunity to spend it. What discounts can you offer? And more than likely, they're going to find those discounts. And so those are four things that we think are going to really position you to really finish the year strong. And we hope you go implement it. So yes, I'm excited.
Yes.
So Terrell,
Now, I would say,
any
before
last
we
words?
yes, I would say is all of those are great tips. Definitely. What you should do is share this episode with other business owners that you know, so they can
Mhm.
finish the year strong as well. Because I'm telling you, those tips will work across the board. And I would say, even though with the vendor, we talked about examples of people who sell physical products, software companies do the same thing. Like,
Yep.
you can probably find some discounts on some of the software programs that you're using. So I will say is that can definitely work. Now, before we jump into this new segment called the tax tea, one of the things that I will say is we started this tax tea because I did a course, and it is a course that we're currently running a year-end special on because there are so many people that we find that are having this issue. Now, the course that I'm referring to is our Stay Out of Jail Plan course. Now, part of the reason this came up is because recently in the news, there have been, a major case of a celebrity that was found, guilty. Well, they were found guilty months ago, but they were sentenced to 12 years in prison. The wife got 7, the accountant got 3. And a lot of that is because the accountant that they were getting information from, insight from, was pretty shady and not giving them the best insight. And one of the things I tell people is, just because your accountant is giving you bad advice, that doesn't mean the IRS is going to be like, oh, okay, all right, we'll look the other way. Like, no, the IRS is still going to hold you account. I mean, because even when you think about it, like the husband got 12 years, the wife got 7, the accountant only got
3. Ooh. Because at the end of the day, the IRS doesn't hold them. Yes, he did bad things, but at the end of the day, you're responsible as a business owner. Period.
Yes. So we started, like I said, that Stay Out of Jail Plan course. You can go to our website. You can get it. Like I said, if you use the no tax fraud, if you use that, that code, you'll be able to get it for a discount. Again, like I said, that's the Stay Out of Jail Plan. And what it's going to talk about is those common mistakes and what's a mistake versus what's a crime. Because there are some things that you do that may be a mistake that isn't necessarily a crime. So you do want to know the difference. And then also we talk about, like, who's to blame, like who actually going to get in trouble for XYZ. And I think for a lot of people that are listening to probably the wrong person, they're going to get themselves in trouble because they're taking advice from the wrong people. So we talk about some of the red flags, some of the things to look out for. Now, because we were, when I taught that class, one of the questions a lot of people kept asking is, this only really happens to really rich people. People are doing millions of dollars or whatever. This doesn't really, the IRS isn't really after or isn't really charging like ordinary people. Well, to the contrary, my friend, because in today's tax tea, it is a gentleman that over let's say a 3-4 year period, he made $400,000 in sales. Now, over let's say a 3.5 year period, that isn't millions of dollars a year. That is like what? That's like what, $100 and maybe $30,000 a year. And that's in sales, in top line sales. So very low 6 figures. And this gentleman he got caught in the situation, and then he ended up pleading guilty. Now, this happened on November the 22nd. So we don't know what the sentencing is going to be. A little bit of time before the gentleman gets his sentence. But this goes to show you that there are some people, the IRS is actually investigating cases, not just of the super wealthy. There are people at all levels that are being found guilty and convicted and sentenced for committing crimes like this. Now, to give you the backstory on this one, because this one was interesting, because it was I guess you say it was a shady and elaborate kind of scheme. So here's what the situation was. The gentleman actually owned a physical store where he sold products and stuff like that. So what he would do is, and this is not my kind of recount of it. This is literally what was written in the IRS's press brief. So what the gentleman was doing is he was finding people who were often addicted to drugs or homeless or like really down on their luck. And what he was doing is he was paying those people to go steal products from different stores, or he was telling them, hey, I'll pay you X amount if you can get, these types of products. Things like, over-the-counter medicine, like ibuprofen, like things like cold medicine, things like, I guess they would call them like health supplements, like vitamins, all that type of stuff. There were some electronics and stuff like that. There were different things that this guy was paying these people. And it wasn't like they just found him. He was going out and he was finding some of these people, and he would offer to pay them to buy the products from them for pennies on the dollar. So
Oh
he was
no.
paying them pennies on the dollar. They would go steal this stuff, come back to him. He would pay them pennies on the dollar. And then he would turn around and take that stuff and then sell it on Amazon. And this guy did this for like 3.5, 4 years or so, and finally got caught. And part of it was probably wasn't reporting this as income on his tax returns. I mean, because
Dang.
most people don't realize is that the IRS, like the tax code, does have a rule. Even if you illegally gain the money, you are still supposed to report it on your taxes according to the IRS. So most people don't realize that. But so this gentleman now there's a conspiracy for theft. And then there's also, like I said, selling the stolen goods, and then failing to report income, full income on his tax return, to where it's just like you got multiple levels of issues going on. Now, here's where I think is important for all of you is one is this wasn't a $1 million scheme. And two is this person was going to somebody to get his tax return, done. Someone should have told him, hey, this income that you're not reporting or that you're trying to hide, the IRS is going to come after you, because what you don't know is if you're selling this stuff on Amazon, it's not like you're making the money under the table. Amazon is responsible for filing a 1099. Amazon is telling the IRS, hey, here's the list of all of the people that we paid money to because they sold stuff on our site. This gentleman did not know that the IRS already knew he was making money. Now, they didn't know the goods were stolen, but the IRS already knew because Amazon had to report a 1099 to say, hey, we paid this gentleman this money. So the IRS has just been sitting back waiting to say, hey, this amount of money better show up on this guy's tax return. And when it didn't, all the dots were easily to connect. And then when they started looking into it, they realized the goods were stolen, and they realized this guy was scheming because he was getting people who were down their luck, who were addicted to drugs, to go steal the stuff for them, to where it's just like all of this evidence compounded against this guy. And it's like, it's not $1 million case, but like, guy, someone should have told you that, hey, you're going to get caught, and here are the ways that you're going to get caught. So that is your tax tea for the week.
No, but you know what I think is hilarious in that whole process? Like the IRS doing illegal things. I personally feel like if he at least filed his taxes, like they wouldn't have found out that it was all like stolen stuff. That's my thought. Because like they have no business. Like Amazon, you sell your stuff, you get your 1099. Like it's not like they're going to be like, oh, are you selling these goods? Are they stolen? Like they don't care. I mean, they probably do if they find out, but it's like, I really feel like if he had just done the things he should have done, he probably wouldn't have gotten caught. But all this to say that you're right. The accountant should have been asking, okay, hey, what's the deal? But to be fair, I don't even know if the accountant honestly would have known that unless he knew the person personally. Like, it's like, hey, you're driving they said the $400,000 was what, over 4 years or over 3.5 years?
Yeah, it was like over 4 years.
Okay, so never mind. It's not like his lifestyle would have drastically changed unless he was, already had another job where he was making a lot of money. So I don't even think that you would have really seen that. But all that to say, the IRS, if you are selling something illegally on a legal platform, you will be found out because, like you said, Amazon was reporting 1099s to the IRS. So that's a good one for this week.
I mean, because even when you think about it from a standpoint, like if you have large deposits going into your bank account,
yeah,
the bank is required to report if the dollar amount goes, I think is above $10,000. The bank is required to report that to the government because of money laundering rules and stuff like that. To where it's like, if you're working with a person who's decent at doing tax returns and stuff, they could probably tell you those things like, hey, if you have deposits going in over $10,000, the IRS already knows about those deposits. And if you are doing business on, let's say, Etsy, on Amazon, if you're doing business using PayPal, using Stripe, those organizations may already be reporting that they are sending you money And the IRS already knows. So the IRS is just kind of sitting back, waiting to connect the dots. And when it doesn't
Right.
show up on your tax return, it's just like, hey, a red flag is going to go off and they're going to start looking at you, because that's going to be an easy one, because they're like, hey, Amazon said they paid you $400,000 over the last 4 years. We don't see that on your tax return. What's the deal? Let's investigate.
Right. No, definitely. And so, yeah, you don't want to put yourself in that position. The IRS, think of it like this: the IRS is always watching. Okay, I know they're not, but like if you go into it with that mindset, you will never do anything illegal. So we hope you enjoyed this week's tax tea, and thank you for tuning in to another episode of the stuff your accountant isn't telling you. And we'll chat with you next time.